I'm Charlotte McLeod with the Investing News Network, and here today with me is Lobo Tiggre, editor and founder of independentspeculator.com. Thank you for joining me today here at PDAC. Glad to see that you've made it in the building.
Back so soon. Mining adventures and fun.
Yes, we are back relatively soon after our last conversation, which was a month ago in Vancouver. We're going to go for a different topic today. We're going to hone in on uranium. And I thought where we could start is with this recent news from last week or so about the $4.3 billion enrichment plan from the US. So to start off, I was hoping you could contextualize Russia's role in enrichment, because I think that this move from the US is stemming from what's going on over there.
Okay, so a key point here is that the US has already put bans in some of the sanctions. They put bans in on Russian state-owned enterprises, right, or quasi-state-owned, government-run businesses over there. That includes their uranium enrichment. It wasn't specifically in there, but I think maybe after the fact or not, I don't know, somebody realized, oh, holy cow, we just slapped sanctions on our major source of enriched uranium. There is a facility, I understand, in the United States that can enrich uranium, but it's not currently doing so. So like right now, we produce zero enriched uranium. All of it comes from somewhere else. Now we do have friends, right? There's still some capacity in Canada and so on. But a large part of it has been coming from Russia. And that just, I think it's been cut off. As I read the sanctions, it looks like it's been cut off. This hasn't been officially commented on, particularly the companies most directly hit by this haven't commented, which I find interesting. But anyway, so here, that's the situation. It looks like we may have just cut ourselves off. So holy cow, we got to do something about this. We need enriched uranium. But so the first point to keep in mind here is that, just because somebody says, oh, this is a good idea, we should do it, here's this proposal, that doesn't mean it's passed. I don't think there's even legislation introduced yet, let alone what comes out of the sausage factory in Washington, D.C. at the end of the day. So yes, there was a lot of excitement. $4.3 billion sounds like a lot of money, uranium. But it's preliminary. Two, it has to be enacted. And then when it does, the devil will very much be in the details. What's going to be in there. If we want to incent U.S. enriched uranium, that doesn't necessarily mean that the uranium has to be mined in the U.S. Can we enrich uranium we buy from our good friends in Canada or Australia or other places? That's not spelled out in what we've heard so far. There's a kind of resource independence whole vibe going now where it's not unreasonable to think that the eventual package may actually incent U.S. producers as well. But that's not a fact here. That's like our friend Rick Rule likes to say, that is an if, not a when question. So it's exciting. A lot of uranium stocks got a pop on the news, but a bit premature. Nothing's actually happened yet. And then when it does, we really don't know who's going to benefit.
Yeah, that was one of my key questions when I saw this was, okay, that doesn't sound like something that will necessarily help the companies, right? And we've seen other pieces of legislation, like I imagine this ties in somehow to the Section 232 things that were going on, but these government, initiatives seem to be quite slow. What are your thoughts there?
It's interesting that you bring that up, and maybe that's something for uranium bugs or those considering the space to keep in mind, was how long that 232 saga dragged on. And then in the end, it didn't turn into anything anybody expected. And even what it did turn into, this U.S. stockpile that's supposed to be initially funded, as far as I've heard, nothing's actually happened yet. They haven't started buying U.S. source pounds yet. When that does happen, at what price? At market prices or at some government incentive price? We don't know. But it is there. It has apparently gone forward. The initial round of $75 million in funding is there to get the ball rolling. With government efficiency, all that $75 million might be spent on setting up a bureaucracy and none on buying. So, it's a good lesson to keep in mind that these exciting headlines and so on, it takes time for all the details to work out, for it to really turn into facts on the ground and who's going to benefit. That said, it sure doesn't hurt. It sure is better than we're going to shut down. We don't want any more nuclear power plants. We don't want any uranium. If only on that level, it is good to see government support. That is good. But beyond that, I think I think it is material. In due course, I do think these things will sort out. The world in this era of the new Iron Curtain going up, that's a big deal, and not anything most markets were prepared for, or regulators, or really anybody, in any large way. And so there's scrambling happening, there's retrenching happening, and I do think that a likely outcome of this, it will take time, but I think a likely outcome of this is that there will be a price for US sourced uranium, and it will be different from the global price. Now, maybe the EU will want to incent its own uranium, and other countries will do the same. I don't know about that, but right now the US is the one moving in this direction. So does that mean buy all the US uranium plays now? Maybe not. You might have to be patient for a while. But it is something to watch. I see this as a trend that is maybe not, full speed ahead here, but it's gathering and it's headed in a certain direction. And if you can predict where a market is going, market direction, that can be a very profitable thing.
Right, and you threw in a reference there to the new Iron Curtain, and I was wondering if you could explain what that is for people who haven't been following you or didn't see our interview that we did on that topic.
Everybody saw that interview, of course. Yeah, well, obviously I'm referring to the previous Iron Curtain that came down with Perestroika and all the freeing of that. The important things about this, I actually have seen other people say it's such an obvious moniker, the old Iron Curtain, new Iron Curtain, of course. The important things are that it's a mistake to just think of this as being the war, right? And that as soon as the war is over, it'll go away. I think most people are sophisticated enough to know that it's bigger than that. It's really about the economic war, of which the sanctions are a part, not a totality. And that's important too, because there's a new oppositionality, there's a new reorientation of the world, and it's not just Russia, it's also China. So there's a new East-West division here that's shaping up. And I think that's long-lasting. I think what we've seen here are actually not even entirely causes, but catalysts for something that was prepped. When you drop that seed crystal into a supersaturated solution and boom, it crystallizes. I think that's what we've just seen in 2022. It wanted to happen, if you will, which is unfortunate because all that peace dividend we got after the fall of the old Iron Curtain, and all that money that was spent on military and so on that could go into making better computers and all these benefits we've enjoyed of the so-called peace dividend, I think we're seeing that go into reverse. That's an investable trend, if not a happy one. But the key takeaway, and this affects the uranium conversation we're having now, but other things as well, is that in a divided world where there are concentrations on one side of this new Iron Curtain or other, that has implications for supply, right? China already has the lion's share of rare earth production. Russia produces a lot of the world's nickel and palladium, and titanium too. That matters. If your biggest supply ends up on the wrong side, whatever side you're on, of this Iron Curtain, you need to retrench. The very least that this implies is higher costs, market inefficiencies, higher costs, which is inflationary. And it's also beneficial to the explorers or developers or even producers already that have projects that you can invest in on your side of the new Iron Curtain.
Yeah, it's easy to see how that ties in with the uranium story. And continuing on in this vein of uranium that we're going on with today, let's talk about supply. So you're speaking about that a little bit. And we know that right now, companies still have operations offline. They're not ready to bring them back on. Can we talk a little bit about that incentive price that's needed for that to come back?
I remember having a conversation with the CEO of one US ISR company that back in the days of $18 uranium, not so long ago, just 5 years ago, they were thinking maybe $30 would be enough for them to start the plant up again. Now 30 comes and goes, 40 comes and goes. Here we are. I'm not just saying it's a moving target. I think it's legitimate to say that costs have changed, the world has changed. This new, more expensive world post-Iron Curtain, the inflation tsunami that's been unleashed, all of this changes. But here's the data. The data is you've got Cameco, right, that they are restarting McArthur River. So that is a sign of some response to the market. You have some of the juniors that have started rebuilding or, dusting off the mothballs from their mothballed production or refurbishing plants, and some of the juniors building new uranium mines. So it has started already. for your lowest cost, it's an important point. One size doesn't fit all. Some projects make money at lower prices, some at higher prices. What I'm saying is there is data that tells us that now we are getting close to an incentive price for the lower cost producers out there. So that's telling us something. But it's also not a stampede. There's a lot of the uranium players, they're not doing anything. They still waiting, biding their time. They haven't made construction decisions. They haven't really even moved on from exploration. They're just there. So I think that tells us that for the broader industry, we're not yet at the incentive price. And what is it? What's the magic number? I don't have a magic number. I think it's probably north of 70 though. Adjusting for inflation, $70 a pound.
Right.
And that doesn't mean, of course, that uranium comes screeching to a halt when it hits that level, because once you hit that level, if you're a producer, you're not going to spend hundreds of millions of dollars building a mine because for 1 week the price was higher one day and then it goes back down. You want to see it stay at that level. You want to know that that level will last long enough for you to pay your mine back and make some money. So this is part of why uranium prices tend to overshoot. So I would expect, based on experience and history, that uranium prices will go way above whatever the incentive level turns out to be. And then in time, because it's not actually rare, right? There's plenty out there. Then it will settle back to the price that miners need to make money. This will take years to work out, and I think it will produce some pretty exciting ups and downs along the way. And I think we're due for an up.
Yeah. Okay. And interesting, you mentioned it's not rare. And I had somebody tell me earlier today, like, it's not rare. I'm not excited about it at all. And I wondered, I think I can imagine maybe what your response to that would be, but I thought that was interesting because there's a lot of space between it's not rare and, we need to have much more.
Well, there's certainly a space between it's not rare and we have refined inventory ready to go. And there was a perception that we had too much of that. But now with Japan restarting the reactors, which is another very big deal in recent news, what could have been a lot of liquid excess supply, not just stuff coming out of the ground, mine stuff, but ready to go, maybe even manufactured fuel rods that would no longer be required, that could come back to the market. Well, now that's not coming back to the market. So that's very significant. And there's a lot of difference there. And then, of course, not rare versus economic is another thing. There's some uranium in everybody's backyard, a few atoms here or there. That doesn't mean you can mine it and make money. Economic concentrations matter. But I guess the important thing here is, there are a lot of things that are not rare, but still, when you find a very rich concentration of it, it's profitable to mine. An important thing for uranium investors to keep in mind is that uranium is a significant byproduct of other things, like rare earths, even gypsum. IOCG deposits, the famous Olympic Dam, they're going to produce uranium, whatever the price is. They don't care. It's like a fraction of a percent. I don't know. It's a tiny part of their overall revenue stream. They couldn't care less what the price of uranium is. And they have to produce it. They can't, leave uranium as a contaminant in their copper or their gold or anything else. So they have to extract this uranium. So that's what I mean when I say that it's not rare. And this is why, as bullish as I am on uranium, and right now I call this my highest confidence thesis for 2022, because as much as I'm a gold bug and I think gold and silver are going up, and as optimistic as I am on copper for decades down the road, of all these metals and minerals, uranium is the only one that's still below the average incentive cost or cost of production around the world right now. It's the only one you can actually say is still too cheap, that the price has to go up for there to be more of it. That's unique. So I'm very, very confident of it. But that doesn't mean that it's uranium forever and that, will never go down. It's going to the moon and staying there. A lot of uranium bulls seem to just get like religion about this. And I think, no offense, but I think that's dangerous. As an investor, you can't be irrational or overly emotional about your investments. And this is one where I have absolutely no doubt, as our friend Rick Will says, that high prices will cure high prices. Now, how long that takes is not instant. But it is something for uranium investors to keep in mind. And the other thing you haven't asked, I got to say this because I always do, and it's important in this space, is that this is an investment thesis that can literally blow up or melt down on you, right? If there were another accident, uranium would go, would crash, uranium stocks would all crash. So I say it's my highest confidence speculation for 2022. That doesn't mean it can't go wrong. That just means that absent one of these very unusual events, these are not everyday occurrences. They're not every year occurrences. They're not even every decade occurrences. So I'm not going to stay out of a potentially very rich speculation because of something very unlikely. But I think in context of people getting emotional and religious about their investments, it's important to remember you've got to take profits in this space. If you have a big win, at least recover your initial investment. You could still have, if you got a triple or more, you could take your original money off the table, still have twice as much money as you put in the first place, and no risk in a space that could literally blow up on you. So I love it. I'm a bull, but don't be silly. There's no crime in taking a few profits along the way.
Okay, yeah, don't be silly. I think that's good advice. So we've checked in on kind of the supply side for uranium. I think we should also look at what's going on in demand. You mentioned the Japanese restarts. Also in the demand category, we've got things like utilities. We have Sprott Trust, of course. What is your sense there of what maybe, they're all quite important, but the most important one at the moment? And I may have missed something.
But yeah, it's not Sprott, actually. The great favor that Sprott did us was hoovering up all these cheap pounds from the secondary market, just going out there, hitting the bid, taking these things off. There was not much clarity before about how much there was and at what price people might be willing to sell. That's pretty much gone. And the price, I think we have much better price discovery now. What's happening now is centered around actual users and suppliers, and the long-term contract price, I think, will bring us even more clarity soon. This is all good. But in terms of the demand side and what's going on now, so I put Sprott aside and the other players like that aside. I think it's much more important to look at the real end users. And we have the Japanese restarts, which is very favorable. We have South Korea doing a U-turn on nuclear. I just read an article this morning about how not only are they going back on, but they're very excited about the small modular reactor design idea. So potentially a lot more reactors there. You have big changes happening in Europe, where, of course, Germany is still dragging its heels, but pretty much everybody else is saying, come on, look at what's going on. We can't rely on this gas from Russia. We need to have energy independence. We're not going to burn coal, but we don't want to, so we have to go nuclear. And particularly some of the newer additions to the EU, very practically minded Eastern European countries, they don't share the phobia that many in the West, despite Chernobyl. Many Eastern Europeans are much more pragmatic about these things. And so you've got Poland and places like that are just like going nuclear big time. I mean, even Ukraine, even with the scare, with that fight near the power plant there, even Ukraine has just contracted for more reactors. So I think this is big. You're seeing the demand in places where it was going the wrong way, is now going much more pro-nuclear. And then, of course, you've got the BRICS countries. Whatever side of the Iron Curtain you're on or you're looking at, it still matters. There are only so much production at the moment, and a lot of it is on the other side of the new Iron Curtain. And you've got China building scores of these plants. So I think the demand outlook is looking very, very strong, actually. The issue there has been that the demand has actually looked very good for some years, but we've had these problems with the secondary supply muddying the picture, which brings us back to Sprott and the great favor they did clarifying that picture for us. So I'm optimistic, actually, that not just I'm a bull on the metal, but I'm actually optimistic that the market itself will start making more sense. That the players, like the Koreans, the Japanese, the Eastern Europeans, whatever, the buyers and the sellers will give us more useful market data going forward.
Oh, that would be refreshing. I know that's a complaint that people have about the market, is it can be very, non-straightforward. So I think as we are finishing up here, you mentioned uranium's kind of the closest thing right now we might have to a sure thing. Not saying that it is,
right? Yeah.
but the closest. And you're telling me before we started this interview, that's kind of in the context of what's going on in the broader markets. And the last time that we spoke, you did warn us that, things could be a little bit dicey. So maybe just if we could end by contextualizing uranium.
Sure.
Yeah, within that.
Well, sort of the broader remark really is that have a big market crash, or even not a crash, but if the markets just go into bear territory as they did this morning and stay there, and we're looking at a protracted bear market, you're going to have lots of things go on sale. You're going to have people getting margin calls from their brokerages, and it's not that they want to sell XYZ, it's that they have to. So you see opportunities really where there's huge differences between the value in something and the price of something in current context. Now that, if we get an actual crash, that might get even more extreme in the weeks ahead. But even without that, it's already shaping up. So I think this is very interesting for all necessary resources. And the uniqueness of uranium that we're talking about is that unlike many of the others, where the prices of the metals or whatever have already shot way up, uranium is still, it still needs to go higher for there to be enough production. So it's absolutely necessary. It can't be substituted anytime soon. I mean, maybe decades down the road, thorium or whatever, but it's necessary now. There's not enough supply now. Can't be changed anytime soon. It's still cheap. And we have markets putting it on sale for the wrong reason. Like, it's like the markets don't care about any of these other things we talked about. Oh, we're in a panic. Oh, we're selling everything. We're going to sell the uranium along with everything else. Our pet rocks and our pet cryptos or whatever it might be. So I guess what I'm saying, the positive note to end on is I do see this actually as a source of opportunity. I see it as an opportunity now. I see great uranium companies on sale now. And if we do get a market crash, I think we'll get gifts. We will get a shot at stupid cheap prices on fantastic companies.
Okay, and very last thing, where can people find you if they want to?
Independentspeculator.com. If you sign up, I promise we won't spam you with a flood of daily advertisements. Thank you.
Perfect. Okay, well, once again, I'm Charlotte McLeod with the Investing News Network, and this is Lobo Tiggre with independentspeculator.com.